Kane here, Chief Investment Officer with Freedom Family Office. I wanted to jump on here to discuss what, of course, everyone's been seeing, the what's happening in the Operation Epic Fury with U.S. and Israel attack on Iran. So I wanted to give you a quick little update on, what is happening and the economic and portfolio implications of it. Certainly, obviously, lives lost is the worst factor here, but let's talk about sort of the economic impacts. Not only is the just a conflict like this expensive, it's estimated that we've already spent about $3.8 billion, and we're have dwindling, munition stockpiles that we're going to have to, refill, which is going to cost money, and of course, we're going to have to raise, more debt, which could potentially increase interest rates further at a time that the Fed and President Trump wants interest rates down. So that's one impact to consider. But the main, consideration is oil prices, right? The main attack on Iran disrupts the supply. About 20% of all oil comes through the Strait of Hormuz. And so that is inflationary. We've seen WTI crude was just in the 50s not too long ago. Now we're approaching $90. It's not as like some of the extremes we've seen, where it got to $140, et cetera, but still a significant rise. And we've seen gasoline prices, increase as well significantly. So that has some implications, right? Immediately. One is energy is in transportation, it's in production, and of course, you feel it, the consumer feels it at the pump. So it has right away an inflationary impact that we're going to see show up in CPI, but it also has a drag on spending and a drag on GDP. So the longer it lasts, the bigger economic drag that it can have. The good news, well, I don't want to say good news, but is to put this into perspective for a minute. First, let's talk about the US versus the rest of the world. The US is not really reliant on any energy that's coming through the Strait or from the Middle East. We get majority of ours from Canada, Mexico. So we're pretty, say resilient in that respect. And what we've seen that in the what's happened in the markets here recently. Like we sold off today's Friday, March 6th, we've definitely sold off and we're into negative territory again on the S&P 500, but not as bad as this past week in international markets. Reason being is they're more exposed to, dependency on this oil and this energy. Let's say China, for instance, I think it's like 80% of their energy comes from Iran. So, this could have big disruption and be more inflationary for European and Asian countries, and we've seen that, kind of play out in the stock markets here. Thankfully, European and Asian markets were leading the US considerably before this happened, so they're still, had a bit of a buffer there. Um, and part of that is the dollar was falling. And in a situation like this, you kind of get that safe haven status where the dollar has appreciated here just recently with it as this happened. The next thing I want to talk about is what could potentially happen going forward. Certain areas of the market are going to perform. Um, Oil companies do well in this type of environment as the price of oil drops, whereas oil sensitive sectors like airlines, for instance, have plummeted. How long this goes on is the big question mark. If obviously we get a quick resolution, oil prices will drop quickly, interest rates will come back down quickly, and we can go back to the global growth story that was, in play beforehand. If this drags on, then we could have more serious economic impacts. Some things to consider is obviously Trump has came out and said that, they've said conflicting things that it's going to be short term, then a couple of months, 4 to 5 weeks, and then as long as it takes, we've heard different rhetoric. I think, no one knows exactly what's going to happen, but you have to put into consideration that it is a midterm election year. We have those in November. It needs to end at least, several months beforehand to get oil prices to kind of come back down and not have everyone going to the polls, looking at, the inflation impact that we've seen recently. So I would think most analysts out there expect that this will be done within month, 2 months, sort of the longest, and that should have a minimal impact on the economy should allow oil prices to come back down. There's, question on how far they'll come back down. They may not go down quite as far as it previous was. I think coming into the year, the consensus was ultimately that we had a energy surplus. So that's why energy prices were coming down. However, we've seen Iran attack some energy infrastructure, and so it could have a little bit more of a lasting impact on oil supply this year, keeping it a little bit elevated. But for the most part, if we do get a de-escalation, it will come back, it'll come back down, and the overall growth story should continue. So what we've been doing, this is kind of why, I've been preaching this year, even though I was pretty optimistic on the overall economy, that, we need to stay diversified for these particular situations. What I'm doing now is, of course, I'm watching every single day the daily traffic of tankers going through the Strait of Hormuz to see if we can start to get the wheels greased here a little bit on oil and gas prices. And so my hope is that we do get a resolution soon and we can go back to the way things were. Some things to put in consideration, right? If you look at, historically, these things don't last too long. It doesn't have too much of an impact. If you look at sort of, unfortunately, this happens a lot, right? Where we get Middle Eastern conflict and we get oil spikes. So, I saw a report about, the past 40 or 50 times this has happened. Markets were up within a year from where it happened, and oil prices were back down. So my advice is, of course, to stay the path, focus on your long-term goals. Let individuals like me in the portfolio where I'm watching, do things become mispriced? Certain things can sell off or move too far. For instance, like I said, if the short term, there was a good story behind emerging markets coming into this year, a little bit of a falling dollar, and finally their earnings, which have been flat or falling for quite some time, turn around to outpace the US. And it was a very cheap valuation. So, right now we just saw, Korea sell off 12% in a day when, the conflict happened the other day. So, if things pricing start to get too extreme, that's where you have to keep your wits about you and then allow individuals like myself to, to start to take advantage of those mispricing. Same thing if oil prices, go up too much and oil company stocks rise too much. I don't think that's going to be a lasting impact, right? So I want to take some of those gains off the table. Certainly, again, I won't go into what was happening before this with the AI and the software disruption, but there's been some unwinding happen here recently with valuations. So point is don't lose your head, don't panic. Stick with the long-term strategy. I'll be trying to take advantage of, mispricings as much as possible. And as always, if you do have any specific questions, feel free to reach out. Thank you.